Rate hikes are driving mortgage stress. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to look at this article as it's discussing, the fact that rate hikes will cause stress. I don't know why that's an article, but apparently it is. Maybe some people don't realize. I mean, you can see here the cash rate, it's going to the moon. And let's just bring up the definition of, housing stress. Now, we need to make sure we're using the right one, or just, the differences in it. So, housing stress is typically described as lower income households that spend more than 30% of their gross income on housing costs. Lower income households, not all. So, if you're loaded and you're spending more than 30% on your mortgage or your housing, you're not under stress. If you're, decimating your 100 grand you got left on your mortgage just for lulz, you're not under stress, okay? You can't claim it, guys. It's only for those that are, lowest socioeconomic group here in Australia. So let's check it out. Higher interest rates will cause stress from BOQ's Alleyway. The Bank of Queensland Chief Executive, Patrick Alleyway, says more customers will face financial stress as interest rates rises hit the economy, after the bank recorded an increase in the number of borrowers falling behind on their repayments. In its half-year results on Thursday, the regional lender said it had dialed back its lending to high-risk customers, such as those with skinny deposits, as it also reported higher arrears, the proportion of customers falling behind on payments. The headline profit result of $256 million in cash earnings for the half was pre-announced last week, when the bank also disclosed it was taking new provisions to bolster its risk management, which it said it needs to lift its game. Chief Executive Patrick Alleyway said higher arrears were expected at this time of the economic cycle due to the rise in interest rates, but the trends were not alarming to the bank. Okay, so we've got higher arrears, so calm down, everyone that's worried that everything's going to come tumbling down. The bank isn't worried. Here's the thing, when people are anticipating significant market corrections, we don't have a free market here in Australia. You've got the banks that are required to have significant buffers and protections in place. And hey, if everything goes wrong, the government will just come to the rescue. Look at what happened to Davis in Victoria. So, Alloway said the quality of its loans book was really high, and the bank had reduced its riskier lending, such as loans with high loan-to-valuation ratios and to customers who were highly geared. We're feeling really comfortable with where the book is today, but you have to anticipate that there will be further stress in the economy as we have higher rates for longer, said Alloway, adding that the bank expected a soft landing for the economy. I don't like this soft landing term. People were saying that about Ireland, guys. Okay, and they didn't have a soft landing. Ireland did not have a soft landing. Look it up, guys. They did not. Not at all. Despite the impact of higher rates on borrowers, Alloway said the bank had been in touch with customers who will soon face higher repayments as their fixed rate loans expire. So this is the impending interest rate cliff, where people fixed at a lower rate, maybe because that's what they needed to get into housing, or because they didn't trust the RBA when they said rates would be fixed until 2024. He indicated the bank was confident these borrowers could handle the rise. I'm not surprised. I've made the argument several times that the average Aussie is going to do whatever they can to stay in their house. There's a class divide between being an owner and not being an owner. That's just how it is in Australia. You want to do what you can to hold onto your home, because being a renter is not, you don't have the same security. And you'll see it manifest in retail and discretionary spending. In a sign of the stiff competition in mortgage lending, Bank of Queensland also said its net interest margin, which compares funding costs with what the bank charges for loans, had peaked last October. The bank's housing loan growth slowed to 0.6% in the half, whereas its business lending was stronger, expanding by 6%. With banks trying to lure customers with cut price interest rates and cash backs as the mortgage market slows, LOA echoed the concerns of other senior banks about the impact of competition on returns. Certainly money is being lent below banks' costs of capital. We don't think that's sustainable in the long term, he said. So let's have a bit of a talk about this one, guys. So arrears are increasing. They're reaching out to people who are going to be hit with interest rate increases, but they're not worried about it. There's always going to be a level of arrears. But the banks may not be as profitable as they are, but this is what we want. You want competition between the banks and the businesses so that they fight for your mortgages. The challenge is going to be for people who've got terrible loan-to-value ratios, who may have bought at the peak of the mania and prices have come down in the areas that they're bought at, and they're unable to even refinance with their own bank for a cheaper mortgage because of the requirements for APRA and other organizations for buffers with the bank. So they could be stuck paying more than they otherwise would have. Well, that's what you get with all the safety nets that are in place. Honestly, I don't think there's going to be as catastrophic an impact for all of this as some people are anticipating or have been predicting for some time. We will see a lot of belt tightening and a lot of, reality coming home to roost. For the first time, some people are going to have to make a budget in Australia. Maybe people need to start watching Ramsay or reading Pope's book. It's all good advice. What do you reckon, guys? Do you think this is going to be something to be concerned about or just something to keep an eye on? We'll have to wait and see. As always, thank you for watching this episode of HeiseSays. Check out HeiseBIM and HeiseDoes for other content that I create. And if you want to support the channel, you can financially on YouTube or Patreon, using our referral links at Amazon, eBay, Independent Reserve, or AussieBroadband, buying our pocket squares, or calling us if you need an architect. Take care, everyone. Have a great day, and I'll see you in the next episode of HeiseSays. Do any of you actually bank with the Bank of Queensland? What's it like? Are they worth it? It's time to shop around. Maybe that'd be worth doing a survey of viewers on which bank they prefer and get the best deal off. That's an idea. Take care, guys.